Following a successful early career in market development and major account sales in the IT industry, Sue Ogilvy is now a visionary researcher and practitioner of natural capital accounting. Drawing on her PhD research at the Fenner School of Environment and Society, which is actually where Charlie did his PhD too, I think, if I remember correctly, and her experience in environmental economic projects, she helps companies identify and realise opportunities to use improved management of natural capital to differentiate themselves in their chosen markets. Sue's been trained at the UN system of environmental economic accounting, and her methods include natural capital in corporate accounts have been published widely. Specialising in natural capital accounting for extensive agriculture, her accounting work is founded on a strong understanding of ecological function and sustainable management of grazed landscapes. So what a great thing that she'll be here now presenting on a social solutions approach to increased investment in natural capital and those sustainable agricultural industries. Please welcome Sue Ogilvy.
It's an absolute pleasure and a privilege to be here speaking at this conference today. It's just so exciting to hear what's going on. So my talk is really going to focus on what are the major trends in sustainability measurement and reporting as it pertains to agriculture. And I'm going to explain why people are increasingly looking at adapting and extending the systems of financial accounting that we've been using for a very long time to create a system of natural capital accounting. So I'll explain what we mean by natural capital accounting, and I'll try to demystify it a little bit by giving you a little practical worked example for what might be a regenerative grazing system. And I'm going to conclude my talk by describing what I see as the role for the regenerative agriculture community in the next stages of development for natural capital accounting. So before we start, I just want to make sure we're on the same page, as it were, for what we're talking about about natural capital. And so there are some various fancy definitions of natural capital that float around, and a nice simple way of looking at it, it really is, it's the soil and the soil biology, it's your grasses, it's your pastures, grasslands, your trees and shrubs. It might be natural vegetation, it might be agroforestry. They're taking in free inputs from nature, and you're also providing some purchased inputs, and they're allowing you to produce agricultural commodities. So again, natural capital is not a mysterious thing, it's the stuff that you guys have been working with, that all farmers work with all over the world. What we understand about natural capital is, though, that as its condition declines, the quality and the quantity of agricultural products becomes quite variable, and the expenses that are required to keep the production system going can increase. And the first major trend is that people are increasingly recognising that the decline of agricultural natural capital is quite contagious, in that it absolutely is recognised to be affecting the shareholder values of entities well beyond the farm gate, extending right through the supply chain. So food and apparel companies can suffer some pretty significant disruptions to their supply chains with agricultural volatility. And they can also suffer some pretty significant compromises of their own product quality if the primary inputs that they're dependent on become unstable or reduce in quality. More importantly these days is that as consumers become a lot more aware of the importance of the environment and natural capital, these supply chain companies are starting to become much more exposed to product boycotts, to increased regulation, increased reporting requirements around the environmental performance of the primary producers that they're working with. And so the numbers, I don't know, you'll probably put this text too small on the screen, but the sort of costs of these are starting to be very, very substantial. But what's fascinating is that when we look at the studies of companies trying to manage their natural capital related risk, what we're seeing secondly is the second major trend, which is they haven't got the knowledge they need to manage that risk. And that's because they're recognising that sustainability reporting isn't effective. So since the first emergence of the social and governance reporting over the last decade, there's been a complete explosion of sustainability reports. And now we have the General Reporting Initiative, we've got the integrated reporting strategy, we've got the principles of responsible investment, we've got the carbon disclosure project, we've got people increasingly reporting their progress against the sustainability development goals. And while those are loosely standards for reporting, they're so loose that they really don't provide guidance for reliable measures of sustainability, and they're not enforced, so you don't really have to follow them, and they're not auditable, so we don't even know whether you're telling us the real deal. Then the fourth problem is that they're often really practice or activity-based or even intention-based measures. And so as Mark Gardner, who I worked with on the farm profitability and biodiversity project we did last year, he makes me laugh when he describes it as the good bloke test, which is like, I used to be a very good bloke, but then I decided to be a better bloke, and I'm now quite a good bloke, and I'm hoping to be a better bloke in future. And that sort of encapsulates the reasons that this sustainability reporting isn't effective. And that brings me to the third major trend, which is that we're starting to think about the economic information systems that have really worked for us for the last few decades, and those are, sadly, the financial accounting systems, and seeing if what we can do is we can adapt them to improve our understanding of what's going on with nature. Because and I've just lost my train of thought. And so because while I'm critical of all these sustainability reports, it's clear to say that by all of these experiments working, it's helped us to zero in on what do we actually need to know if we're going to take a collective responsibility to manage our collective exposure and responsibility for quality of natural capital. And so the information that we need to have to take collective responsibility is pretty simple. We need to know where producers could use a natural capital investment to improve their profitability, and we need to know where an increase in natural capital would actually compromise their profitability, so that where citizens and governments identify a need for investment in natural capital, natural infrastructure, that we can understand where we need to make those investments, who should make those investments, who are the beneficiaries going to be, who should maintain them, and who should pay. So we need to obviously understand where we're seeing degradation, and where we see degradation, it's absolutely imperative that we understand whether it's degradation that's actually caused by management practice or whether it's degradation or condition decline that's a result of factors that are well beyond a producer's control. In the small case of, and I think it's a very small case where we see unscrupulous producers degrading natural capital, we obviously need to hold them to account, and we need to make sure that they can't avoid the economic burden of degradation. But what's interesting is that these issues are the issues that the financial accounting systems have been addressing for decades, but only for financial capital and only for produced capital, so buildings and plant and machinery, airlines, etc. And so increasingly we're looking at then adapting those standards, adapting and extending them to include natural capital. So the two formal accounting standards that I'm talking about here are the system of national accounts, which is the system that's used by all governments of countries to understand the health of the economy, and don't snort here, the sustainability and prosperity of the economy. And then the corporate accounting system is the system which all individual entities, whether they're big for-profit organisations, small family farms, governments and not-for-profits, all prepare at an individual entity level. In 2012, the United Nations released the system of environmental economic accounting, which allows us to measure the environmental resources that we have in the economy, the contribution they're making to the economy and society. And the international accounting standards are still silent on whether ecosystems should be considered assets of a business, and that's where my research was focused over the last couple of years. And I was very fortunate because I was able to draw on the developments by the United Nations in including environmental resources in the national accounts. And the national accounts are what produces things like GDP and the balance of payments. And so with the advances on how to include it in the national accounts, I was able to draw on that. Plus, what I have enjoyed enormously is the pleasure of being able to draw on the knowledge of the regenerative graziers, the pastoral industry, rangeland scientists and ecologists to look at how could we adapt the corporate accounting standards so that ecosystems can go onto the books. And my conclusion is it's really quite easy because of all of these advances and developments of farming communities and scientists. So I'm going to give you a little bit of a worked example. Before I jump into it, the fulcrum or the hinge point of natural capital accounting is obviously the ability to measure the condition of ecosystems. And so there are a number of absolutely terrific standards that have been emerging over the last few years to help us to do that. So right from the pasture condition assessments that have been developed by the Department of Agriculture here in WA, and an ABCD, which would be the equivalent used over in Northern Territory and Queensland. Those are ecosystem condition measurements for grazing purposes. More holistic ones are the Australian Ecosystem Models Framework, which has been developed by the Department of the Environment and Energy with CSIRO. And then some of you might be aware of Accounting for Nature, which is the Environmental Condition Index, the ECOND, that's been developed by the Wentworth Group of Concerned Scientists. And it's developments like that which could mean that we might eventually have a sort of a GDP for the environment, which I think would be very useful. So the example I'm going to just produce here is a very simple one using the West Australian pasture condition classifications. So a pasture in good condition is going to have not just condition for grazing, but it's also going to have a whole lot of biodiversity. It's going to be higher in carbon. It's going to be able to infiltrate water. So all of the things that we've been hearing about this morning, the soil health, microbial health, biodiversity, landscape function, they're beautifully encapsulated in those very simple classification standards. And what we know is that when land is in good condition, you can run more stock. But if you run too many stock, you'll drop your land condition and then you won't be able to run more stock anymore because you'll have liquidated a little bit of capital. So the managers that are using good regenerative grazing systems are measuring and mapping their landscapes, and they're understanding what sort of types of ecosystems they have on their properties, land systems, ecosystems. On the big spreads, they're mapping their water points, and they know how much of the different ecosystems they've got at different distances to water, and they're probably using a combination of remote sensing and field observations to understand the condition of those ecosystems at different points in the landscape. And that means that those good regenerative farmers who are already doing good management practice are already able to present what would be a very basic accounting table, and this would be the equivalent of an asset register owned by a business. And this simple table just shows us an example of on a paddock basis. We've got different sorts of ecosystems in the paddocks, and we know that we've got different areas of land in different conditions. The other aspect of really good regenerative management, and this is something that RCS teaches and equips farmers very well to do, is the grazing plans, which are all about making sure that you're matching your stocking numbers to the amount of pasture that's being produced. So this lends itself beautifully to a form of an accounting table that measures the sustainable patterns of use and is very important to attributing any condition decline to management practice or to exogenous factors. This little scenario I've put here is a 10-year period. It's simulated data, and it's showing that for the first 5 years that we've got overgrazing, and then we've got a change of heart, and the next 5 years the station manager has chosen to retain more of the pasture for the ecosystem and not to the cattle. So the first line here is the amount, the forage budget, that's the amount they've calculated that they can sustainably consume for the year. The second line, the forage, which is the ecosystems consumed, is the amount that the cattle have actually consumed. And then of course we've got some nice red numbers here which indicate overgrazing. So it's consumed more than can be safe, and we've got a risk that the ecosystems will decline in condition. In the second scenario, the 5 years, we've got a retention of resources back into the landscape. We would expect to see the ecosystems improve in condition in response to that, but they may not. These are complex systems and surprising things tend to happen. So of course, when you've got, so with those couple of simple tables, you've got your natural capital accounts almost all built, and now what you need to do is you need to understand the carrying capacity in physical terms and also in monetary terms. So of course, most organisations, including small family farms, are generally, if not formally, following the corporate accounting standards, or informally. Their accountants are preparing financial statements for them every year, and that makes it pretty easy to understand what the condition of the ecosystems means in terms of the number of livestock that can be carried and the monetary value of that. And so combining our physical accounting values, which are so important to understand what we've actually got in terms of our natural capital, with those other measures about carrying capacity and monetary value, then voila, we have our natural capital accounts. So this table is a very simple summary table, and you could obviously have you would have lots of different detailed accounts. And this simple summary table is showing us that we have our opening balance, which was when we looked at the system, say 5 years ago, we valued the property and we valued it with a condition. We had 9,000 hectares in good condition, we had over 20,000 hectares in fair condition, 51,000 in poor condition and 9,000 in very poor, and that was a carrying capacity of nearly 5,000 head of livestock. And the monetary value of that ecosystem is separately land, so its contribution to income, its income earning potential is nearly $1 million. When we revalued the property on D2, we found that we had more land in good condition and more land in fair condition, less land in poor condition, the same in very poor. So this manager has upgraded the condition of their ecosystems considerably and added about 714 head of livestock over the period with a value of $120,000. One of the things which was a project that I did with the ILC, Indigenous Land Corporation, a couple of years ago, it was very important for them to be making sure that we couldn't be degrading the land, that a lessee couldn't be degrading Aboriginal lands if they were leasing it from them. And so we introduced this concept of the natural capital obligation as part of the balance sheet. And so the bottom line there is a little bit of an example of if you had a natural capital obligation, you had to keep that lease in certain condition, or you had set your own targets, that you could very easily reflect those in a good conventional accounting thing, and that would give you that complete understanding of what your natural capital position is at a point in time. And so I think that these sorts of approaches to natural capital accounting at the entity level are really, really important, because if we had enough producers producing natural capital accounts to give us this rich set of information, then we would have enough information to be able to give producers some understanding of, would their profit improve if they made a natural capital investment, or would it start to constrain their productivity and profitability? And that information, if we had the linked information from a farm business being fed into us, let's say government, who might be able to do some analysis, we would finally be able to get the answer to the question that we probably all ask ourselves, which is, how does regenerative agriculture actually compare profitability-wise to conventional agriculture? And it's those larger data sets that we need to be able to do do that sort of analysis. But the other advantage is that natural capital accounting gives the sustainability conscious firms, or the ones who are wanting to make sure that they're dealing with the really good producers and avoid the ones who are, less good at managing the environment, to give them the ability to have really reliable, robust information to work with, so that they can then demonstrate to their own shareholders their ability to detect the good producers and avoid some of those environment-related risks. And so that brings me to the conclusion of my talk, which is that I think the regenerative community are incredibly important in the next lot of development of natural capital accounting. I've made it look quite easy in this example, and I think it is. I don't think it's that hard, except that the regenerative community is a unique community in that amongst its population, it's got producers who have demonstrated that you can deliver environmental performance alongside agricultural production to a higher level than we ever had thought possible. And that's why when we claim really good environmental and profitability performance, we tend to see those attacks coming, and we tend to be called liars because it is just so surprising. Natural capital accounting is a new field. It's really emerging rapidly now. And I think that the next sort of stages of development, we don't have much time. We've seen how urgent things are. The next stages of development have to happen really quickly. And I think that with the unique experience and knowledge, and I'm going to say culture of regenerative agriculture, it's the sort of community that could really rapidly accelerate a whole bunch of things if we could involve you in the co-design. And so I'm really looking forward to the opportunity of, if you are interested in being part of natural capital accounting in future, work perhaps with the RegenWA crowd, and we'll see if we can get some useful projects and start to incorporate your insights and knowledge into the next phase of development of this field. And if we have time, I'm happy to take some questions.